What's up, guys? Welcome back to another video. And today is regarding this article on CNBC. Wall Street top analysts are bullish on these stocks amid market volatility. Okay, so this is the one, and is regarding of a few stock. Marvel, they recommend to buy Ford, Figs, Tesla, Warner Brothers, and CrowdStrike. So basically, they put out a case. You could read it. Mostly fundamental, but nothing on the technical. So at this point, that's what they recommend. I mean, I mean, sometimes even though the fundamentals sound good, but doesn't mean it's gonna work. Especially depend on the market situation. Usually, you want to buy things concurring with the market movement. At this point right now, we have the market is in a downtrend. So even though this stock might be bullish, it could still move down with the market. But depends. So at this point, so let's just look at these stocks. Okay, so you can read this article yourself if you want to take a look at them. Okay, but I'm gonna do like more of the technical and see whether or not we should buy based on the technical and combine with the fundamental. Okay, so basically the first one we have is Marvel, right? So this is a daily chart of the of Marvel. This is the tech sector, right? Semiconductor, I think, company. Oh, okay. So they think all back. So wait, they lost money? I thought they're making money. This company. This is like a 5G. I mean, I like this stock. I had it before, and at this point right now, look at it. Like it's kind of top out. At this point, I put in a lower high here. So there's a double top, but this is a lower high, and then it's been trending down, and it's in this channel right now. At this point, and you could see, right? So during 2000 and 2020, the COVID, and this is how much it's ran up, right? From basically, it was around $30. It moved down to, let me see, $17, and then it went all the way up to $95. And look at this, right? This trend line I drew from the bottom of 2020 all the way up, and it's also break that channel. It's went to this, kind of went to this, so it's broke this channel. I mean, if you want to draw this one here too, so it basically just broken all the, is already, the up channel has already broken, and it's kind of retested right here, and just fell and moved down, and it stay in this thing. So right now this is very toppy at this moment. There is a lot of meat on the bone for this thing to go down here, and depend, well, this coming week we have the Fed and see how the Fed gonna be doing, and also we have the Russia and Ukraine war. I know Putin is kind of like crazy right now. I just read some article. Well, I mean, it's on daily something. It's a crappy news site. He said that Putin is on a roid rage. So that's the thing. So that's why he invaded Ukraine and doing all this stupid shit. But to be honest, whatever the thing is, right now Putin and Jerome Powell has to control the market right now. So we'll see at this point. But at this point, from the technical point of view, I don't see buying this thing. If you jump in buying this right now, you have a lot of downside. Right here, around $55 is, I would say this is a strong support, right? So I mean, if you want to wait until down there and buy, but at this point right now buying this, I mean, it's a possibility. The thing is, put in a lower low here. If you draw this out, I mean, it's possible it could bounce. I mean, at this point, if the war ended, and then Jerome stick with the 0.25 rate hike, and then being more dovish, maybe we do have a bullish a bounce in the market, and this could bring this thing up. It's a possibility, but at this point, I think the risk for this is much higher than what it is. And then we have this contest, the 50 days moving average here, and then right here we're going to come in at the $82. That's going to be a big resistance also. So at this point, I'm not sure the risk, the reverse. I mean, if you depend also, like if you buy this for a trade, if you buy this for a long-term run, if you're going to buy this, decided to get in and then the long-term investing, maybe just start to buy here, and then maybe divide it into like different position, like add on, and then just average down if it does continue to move down. So at this point right now, if that's what you want, I would kind of stay away from this for at this point right now. I'll see how the general market is doing. If the general market is reversing, maybe I'll get into this. But at this point, look at this. This is the weekly chart, and you could see how it just broke this the double top, and just broke that. So basically, it's still a lot of thing to go. So I kind of would stay away from that at this point. And this also is technology, with the increase in rate and depend how's everything go. We'll see. But at this point, Marvel to me, I would not get into it for now. All right. And then I think the next one is Fig. This one is, I believe, is the healthcare supply. Is the supply, I think, workclothes for hospital staff and stuff. I mean, this one is IPO. I think this actually is IPO last year. Okay, around June, around $28. That's the low, I guess, of that day. I'm not sure what. It's around 20 something dollars, $28, $30, and then it just dripped down to this point. And right now, I mean, it looks kind of bullish. Okay, so the earning right here, I guess the earning was good, and it's gap up right here, and it's pulled down, and then the gap up. I mean, the volume is fair. It's more than the average, double the average volume, and the selling actually the volume is low. So I mean, possibly this could continue break out because it did drift down in this channel here, and then now is contested with this channel. We have a resistance right here, and then the 50-day moving average also. And depend. I mean, this is a potential buy to me. Is it in the healthcare sector? Healthcare sector at this point right now. Well, let's take a look at that too. So this is the weekly chart on that. Let's take a look at the healthcare. No, that's communication. Okay, this is the healthcare sector, right? The thing is, I just look at the healthcare sector too. It's very toppy also. At this point, see, look where it is. It's kind of put in like, it look a little bit head and shoulderish, but it is not. So it's already broke below the, let's take a weekly here. Weekly chart's better. So if you draw this out, it's already broke below the uptrend line here. And it's top out at this moment. Right now is dangling on this, it's bouncing off this support line right here, or else it could gonna continue down. Then we also have another trend line up. So right now, I mean, it's questionable, but it's very toppy too. If we do get into recession, I mean, this might break under and has a lot of things to go. But the thing is, that stock is a new IPO stock though, so that's the different thing here. So let's go to daily of the healthcare sector here. I mean, right now, it's kind of bullish compared to the SPY and stuff. Right now at this point is this high is good. It looked like a 50% retrace from this bottom here. So I mean, it's possibly could go. And the healthcare sector, I mean, is still better than the other sector at this point. So I mean, and it's also break out of this downtrend line already, of the main trend line. So possibly this could move. I mean, the healthcare sector, if the market decided to move back, I think the healthcare sector might lead. This one here is good. So this one, the Fig, I think is a possible buy here. This is what you could do, right? I don't know what I'm talking about. Okay, so just so you know, I'm just saying things, So please don't take this as a financial advice. You will lose. Okay, I don't know what I'm talking about. So just so you know. So at this point, if I do it, if you want to do long-term investment, I guess it's a possibility. I don't know if this making money yet. Oh, it looked like it might making money. I don't know. You gotta look into that, and then the revenue is increasing. So right now, I mean, this earning is actually pretty good, right? That's why there's a gap up here, and then the retracement is still good right now. And then we have this gap right here, but at this point, it contested the downtrend line right here. So if it's bounce back, it's breakout, that's very bullish. So we only have those resistance right here to 50 days, but depend if it could go move back up, so that means they're going to break out of this downtrend line. Okay, so if the general market going to move, have a bounce, this might be good. So I mean, if you want, I don't know, if the long term you want, you could do this in the long term trade. I mean, you could buy and hold for 5 to 10 years. That's up to you. But if you want to do a trade, I could do this. You could start 1%. You could divide into like 2 3 portion. You could start to accumulate one position right here when the market open on Monday, I guess, and then start one here. If it's move up and it's break it down this level, you could add on a another position, and then if it's moved below this, you close out. So if you do it as a trade, there is a risk right here. This your risk, right? And then the gain, I mean, hopefully once it go up, this gonna be the resistance level here. I'm assuming. So okay, the IPO prices when it's open. So that's something if you want to do a trade. I think it is decent for a trade. If anything, I think it's a trade, but for long term, I mean, you have to do more research on it. I don't know much about this stock at all. This is the first time I'm seeing it, so I mean, it looked kind of cool. So that's something. This is something I definitely would consider as a trade. Okay, and then the next stock I believe is Tesla. Tesla, I mean, is in the this one is like the consumer discretionary, but because due to increased prices on oil, I mean, it's been favoring for the Tesla, and so far the technical wise too is actually pretty decent. The low that they put in, and then the higher low here, which is like maybe around 38%, it's not even 50% yet. So with the Fibonacci retracement, this looks pretty good. I mean, if it could bounce above here, and you could go. But the thing is, this stock is like the price is $850. I mean, depend how much money you want to spend. I mean, I'm not sure, to be honest. This, like, if you look at this, right, for long-term investment to buy in at this point, I'm not sure I would do that, to be honest. Just look at the weekly, right? I mean, it's top out. It's on the top right now. I mean, it could go up and make another high, which possible. I don't know. I mean, if you want to do long-term investment, to me at this point, the risk I think is more. It could drop here, but I mean, how much is go up high, I don't know, because also the general market, where it's going to go from here in the general market, and then we're not sure if we're going to have some kind of problem right now with all the inflation and stuff. So consumer spending might be a problem. They have to deal with daily expense. They might not have money to buy Tesla, and Tesla is also expensive. And then we also have the increased prices on lithium and cobalt, all that other elements also. I mean, the price of Tesla might also rise, and then they might have problem with the margin, right? So that's another point to think about. So at this point, long-term investment in this area, I'm not sure. I mean, if you want to do a trade, it's a possibility. Like I say again, I'm not a financial advisor. Don't listen to me, okay? So I mean, if you want to do a trade, you could get in here. Your stop loss is here, and then your gain is possibly back to the high, right? Or right here. I mean, this is going to be your first resistance, the 50-day and then the 100 days right here. But if your projection, you could go up here. So I mean, that's like 1 for 2, right? If that's what you want to do. But at this point, the stock price is way too expensive. How much money you want to put in for a trade, that's questionable. Or you could buy option. That's up to you. But at this point, a trade possible. Possible long trade, I think, is a possible. But investment wise, questionable. All right. Up to you. Up to you. I'm just here to voice my opinion. Just so you know. And the next one is Warner Music Group. Okay, just so you know, I just started adding on. I just started a position on this early on the year. I'm just adding slowly, accumulating, averaging down right now at this point. So I might be biased on this one. All right. So, and this one is like I guess just recently IPO too in 2020. And I mean, it's moving up, right? Up to like $50 and then move down. The reason why they're suggesting this is because you're gonna need music on the metaverse, and I'm bullish on the metaverse. I think it might be a little bit too early at this point to think about the metaverse, but I think music is definitely a part of the metaverse. That's why I choose this. I don't really know much about the company. I just knows about it, and then I'm just do the technical. I'm just adding slowly. I'm not crazy. It's still a risk because, like I say, at this point right now, look at it. It's just trending down. It's like a waterfall right now, at this point, and but the thing is, it's coming to like support, and then the lowest right here right now. So I mean, I'm just slowly adding. I'm not buying that much, but I'm adding slowly and see how the whole general market goes too. Because right now we are possibly by the end of the year we might go into a recession and all better off, right? So I don't know how everything gonna goes, to be honest. So but right now I'm trying to just accumulating small amount, and then if anything we have a good sign, maybe some like I'll buy a leap for option or something. But for now, I mean, I see a potential to go in here and then add in slowly from this level down to here, and then if it break this level, and depend how the general market is, you might have to close out a position. I'm not sure. Or just hold. If you're gonna buy this and hold for 5 to 10 years, I think this might be okay because this just recently IPO too, right? And maybe you have to look into. I need to look into the fundamental for this stock though. So that's one thing. And this is, I mean, the metaverse, the music for the metaverse. This is what I base it for. So the thing is, I'm gonna just hold this thing for a while. And see, just averaging down slowly. Okay, so if you do want to go in, that's something you could do. For a trade, I mean, it is, to me, I think is kind of bearish at this point. It's not even like up to the 20-day moving average yet. So and then the downtrend line, this down channel right now, and then below the 20-day moving average, I would not typically trade under the 20-day moving average, to be honest. So at this point, I wouldn't recommend this, to be honest. I don't. I'm not sure why I'm in it at this point. Now I'm questioning myself. Like that's why I kind of do these kind of videos, because I want to see how I feel also. But at this point, it's a possible if you want to decide to hold this for a long time. That's something to add on slowly though, slowly. But at this point, no trade for this. Definitely no trade. Just long term if you decided to go for the metaverse theory of it. Okay. All right, so that's what I see for this. Weekly, look, you could see more big, just dripping right here. Actually, like the weekly, this candle right here is very bullish. So if it's make above this level here, 34.45, I mean a possible go like 34.45, like right here. So it broke the downtrend line. It's a possibility, but it still could go downside, but depend. And the volume is decent here on the move up also. Okay, so just so you know. All right, and then okay, so the next one is CrowdStrike. I just traded this last week. Oh, let me close that note there. Okay, so I do have a problem with this. One thing, the move in general wise right now is already what I like it before is that the theory is that we are in a war right now, and this is cybersecurity stock, right? So it should be good. And the earning, they did pretty good on the earning, but the problem beforehand, right? So I got in somewhere around here actually, and then I already closed out the trade. So right now it's broke out of downtrend line and it didn't make a high, but it did make a high here. Okay, so to me is bullish, but the problem I see about this is that when it move up right here, right, it's pull back. This is like 90% pullback, like 85-90%, and then it's make a high, and then it pull back all the way. This is like easy 90 to 95%, which I don't like at all, because the pullback is way too heavy. Because if it does pull back about 50%, that's bullish, but it's pulled back this much. So at this point right now, the way it looked, I mean, right now it hasn't make a high yet, even though the earning was good. So we're gonna see if it does make a high. If it does make a high, and then it pull back around 50%, and then start moving back up again, I would consider that as a trade. But at this point right now, if it's moved back all the way down again to like up to like 80, retrace 80 into 90%, that might be bearish for the stock. And then look, if you look outside here, like this is already double top, right? Triple top kind of way, and then it's moved down here. consolidate and then break down, right? Measure move, measure move. All right, and then that's how I see it. And this point right now, the next support right now is a support, right? That's where it's supporting. I'm sorry, and this is next stop if it does break down from that, and then it is possible because look at the weekly chart here. Think about it, right? This is 2020 low, right? And then it was down here like before the COVID, it was $68, right? And it ran all the way up to $300. So I mean, it's quite pricey, and I'm not sure they make money. They're actually losing money, so they're still losing money at this point. So that's another problem. It's losing money, it's not making money, and then with the valuation right now, the stock market in general, we don't want to buy anything on the if not making money. So this potential, I mean, moving down right here, it's possible it could go down and around this level. So at this point, very precarious. And like I say, if you want to do a trade, I already told you, but the volume for last week is pretty high. You could see, right, pretty decent. So that's why one thing, right, I'm kind of bullish on this volume, but we'll see if it's going to make a high not. If, like I said, if it's make a high, pull back around 50%, pull back to around 180 here, consolidate a little bit on the 50-day moving average and the 20-day moving average, and then start bouncing up, then I would start position, and then the stop loss would be down here, and then that would be a trade. But at this point, for long-term investment wise, I mean, it's a possibility, but at this point it's too toppy for me, and it's not making money also. So I'm not willing to go into do a long-term investment. Would be a trade, but not a long-term investment. All right, that's how I see it. So those are the 5 stocks based on that article. So I mean, at this point, long-term investment, if you're willing to hold long-term, just averaging down slowly. Okay, so if you want to do that, that's one thing. Let me see right here. This just a help. Okay, this look, the semiconductor, right? This none of them is the Marvel, right? Look how this is the weekly for the semiconductor, the SMH, right? It make a sideways consolidation, and this is like double top or whatever it is. Let me see here, kind of double triple top, and then it fell. Now it's moved down, and then the volume here. Look at the volume. It's kind of like, and this look somewhat kind of like head and shoulder too. So semiconductor stock might be a problem. Okay, and then it break, and look at the volume when it's break down here. The volume is spiking, right? And then also here with these volume that breaking down on the semiconductor is high volume. Okay, and then it's broken down. This uptrend line is broken, and then the secondary uptrend line is also broken. So right now, I mean, it's dangerous for the semiconductor right now. I mean, I'm kind of bearish on that based on the general market. Okay, so just be careful with that. Just so you know. You know what? Let's just. I was about to go into this, and then also communication. Communication was based on the Warner Brother. I mean, right here with the communication wise, it's been dripping down, and it's been moving down way much more compared to the other sector. So I mean, at this point, is it already oversold at this point? Maybe, right? So I'm not sure. So just so be aware, like when you do something, when you're trying to buy something or a trade or long-term investment, make sure you're also aware of the long-term market. Where is it going or trending? Okay, so at this point, we might go into recession. If we do, everything is going to be so off. Okay, so anyway, that's it for the video. If whatever you think I'm right or not, put in the comment section. That's all, guys. Thank you, and good luck trading. Okay, bye.